And for more on all of these important stories, Ron DeVary's here with us in studio from NewOak, and Tim Spiess of Eisner. Thanks to both of you getting up so early and coming in. You know, Ron, you've been through the ringer, I'm sure, on these types of things before, but yesterday was particularly crazy, and absent that 10-minute stretch where, you know, obviously something went wrong, as Jenna alluded to. Is there a larger message in the fact that the market was already down so much on the Greek worries, or do you write all this off to a typo in the markets?
No, I think the computer glitch is telling us that even a single large trade will excite essentially the market. You know, sure, the first trade was a typo, but people started selling. When the market started dropping, it shows that.
What does that tell you?
It tells me that the fundamental behind the market is not really strong. People are actually ready to lighten up. And they're just looking for excuses. And that's really the reality of the situation. I think the computer glitch is telling us that the markets are actually very thin, especially there is no floor on the bottom. When you have a 10% drop because of large typo, you know, can you imagine if that trade was real?
Exactly. And still, we still don't really know.
No, exactly.
So what's next, Tim?
Well, first off, the breakers were off, by the way, after 2:30. So otherwise, the market
the circuit breakers
down.
where the market
Exactly.
would have stopped trading. Late in the afternoon, that doesn't happen unless you get a 20% drop, I believe, and then you'd shut down.
Right.
Go ahead.
And the SEC's already. I mean, my sense of this is first the good news. The good news is there was nothing economic, geopolitical that would have caused this kind of decline. I mean,
in other words, Greece is bad, but it's not 1,000 points bad.
Exactly, nothing like that. I mean, why would Apple drop as much as it did?
Right.
It's not explainable. The other side of it, more mysterious, is that this was all technology-driven. A trade, a virus. There's even some views that it could have been a purposeful program that was injected.
Right. But it's not like it happens in just with nothing else going on around it. I mean, this whole situation and these dramatic pictures, not only these of the New York Stock Exchange, but the ones we were watching yesterday from Greece, are happening in the backdrop. And the market was down a couple of hundred points. Yeah. And we do have one more day of trading to get through today. So how does today shape up, knowing all that and not knowing what happened yesterday?
First, I agree with that, but it's not a 1,000 point.
No, understood. But still.
My sense of this is I would not be surprised. None of us really know. Sure. I would not be surprised if today you saw a recovery and we were only down, say, net 150. Okay. Actually, this is
the 2 days, right?
Exactly. This to me is a great buying opportunity. I mean, if you're an investor.
Well, did you buy Apple? You talked about the drop that you saw, for example, in Apple stock. Did you go shopping yesterday?
I did not.
Well, isn't that telling, though?
Well, this is going to be viewed, in my view, as an isolated circumstance.
But you still didn't buy on it.
No, but that's not because I didn't think it was at a good low value. It's just because I just didn't do it because I'm busy, unfortunately.
Who did?
Tim.
No, I'm serious.
Who was in that buy button?
It was 3:30. I was in meetings. I look at it. But no, my point is, but today, are you kidding me? You're going to see a lot of money going.
So you're ready to buy today?
I'm absolutely ready to buy.
All right, let's talk more. We'll have both you guys on for the hour. In fact, I want to know who was buying down 1,000 points, though. But there are more riots.
Ready to buy, you buy.
Exactly right. There are more riots, from what we understand, in Greece, and there may be more protests today. I mean, but Wednesday's ADP report in private sector employment showed an increase there. So let's bring back those guests that Jenna mentioned. Ron DeVary and Tim Spiess are still with us on set. It's almost, well, I don't know, maybe it's not. At 8:30, maybe the focus will come back here to the United States. But it's almost like we've forgotten the fact that the biggest economic report in a long time is coming out this morning. Tim, should we have?
Well, I think it'll get some news, but the story today is, well, what occurred yesterday. It would be nice to see. I think we're going to see an uptick, but it's not going to be measurable. I think we will be still around 9.7. You're going to see increasing payroll.
Well, what if we had 250 or 300,000 jobs added or something like that? Would that get everybody's minds off Greece?
Well, for a moment. I still think, though, that would be great if it happened. I still think that Greece is going to be the big story in the EU.
Well, and we keep on coming back to jobs. We keep on saying this is what it really comes down to, Ron.
Absolutely.
How do you position yourself then ahead of this report and after a day like yesterday?
I think you do it very calmly. It's quite obvious that the market has actually been ahead of itself, and this market has been primarily a liquidity-driven market. And as those liquidities and stimulus packages are going to come off, so you're going to see the economic activity we're going to have to go to a real fundamental. What is really the driver of our economy? And that transition is still ahead. You know, the rates are going to have to go up. Liquidity has to be taken away. And, you know, the government purchases of securities is coming off. So those things have not really yet taken effect. So the investors have to ultimately become responsible and to really look at the underlying fundamentals, which we all say that, you know, a lot of the investors have not done that because they've been scared of liquidity, you know, being left out of this liquidity driven.
Sure.
And those, as they pull back, especially as we get close to the summer, people want to really lighten up and really.
But what's really happening in the United States right now? I mean, there's a debate, and I heard a lot of it yesterday, between some people who say that yesterday was really the first big sign that the world in general, starting with Greece and spreading throughout Europe and eventually maybe even coming here to the United States, has to go through this kind of day of reckoning was one of the phrases that was used, or pay the price for the bailouts that were put in place to prevent the economy from collapsing during the crisis. Is that once you socialize the losses and all this type of stuff, there's no free lunch and you have to pay for it. Will that happen and spread from country to country, or do the fundamentals of the United States economy kind of prevent that from happening, and we'll end up in recovery? Right?
I think we started with a subprime bubble.
Right.
Now we're dealing with a sovereign debt bubble. And that sovereign debt bubble is not going to go away.
But is it going to come here?
Sure, it's going to be global. I mean, that issue that, you know, as we know, the world economy is very well connected. And, you know, as you said, you know, it's only, we're looking at a very small country, a very small portion of the GDP of the Europe is actually causing these problems. Not because that if you actually take that out and completely insulate it, you're going to cause an issue. It's because it really points to the fact that there are some other fundamental issues that we have not yet addressed. That whole issue of the euro system is really not a system. It's really a currency system. It's not a full integration issue.
Right.
And as those issues are going to be attacked by the market, it's now right now the market versus really the governments. And that's what we're really facing. You see Merkel and Sarkozy, they're both out there trying to talk the market, saying that we're going to take action if you guys are actually going to short us more.
However, Connell's question, I mean, you look at the United States, this could almost be looking in the mirror 20 years out for us here in the United States.
20 years?
Maybe less. The debt levels is what's concerned me. We've taken on globally. We've taken on so much debt as
that
government
was my point, yeah.
that unless productivity, employment, GDP growth increases to be able to manage or fund down that debt level, it's a problem. I mean, you can only either cut expenditures or increase taxes. That's the only way this works.
This is a warning.
Absolutely.
All right.
And I would say that, you know, the countries like Portugal, which could be next, Spain, that would be a big problem. But if the EU can keep this contained to, say, a Greece or Portugal, maybe.
Well, the reality is that the governments have become the lender of the last resort, and they have tried to make sure that hold the system together, that we should really let's find a really stable point. We're not at the real stable point, and the minute a glitch happens, you'll see the real markets. The real markets are probably 10, 15, 20 points below where we are today.
Where we are today.
That's really what it said. People were not there to buy.
Right.
You know, you were busy, obviously, working with your BlackBerry.
Talked about that earlier.
But, you know, the reality was there were a lot of people watching, and they were not ready
and they weren't ready to
They were not ready to face the fact that, you know, if everybody says if it's a buyer at X, there should be a buyer at point on X.
Yeah, but you're assuming yesterday was a real economic reason that this.
No, there was not. No, it was a psychological.
No, we don't.
Point.
I don't know if we know yet.
It was a test of a psychology of the market. Don't forget, markets are nothing but psychology of the sellers versus the buyers, right? It showed that any small reason causes people to say, I'm going to take my money off the table. Right. And that is a real point.
Well, it seems like, just to interrupt you there, we're back to the question of, is it the day of reckoning, which is something that we're not going to get to right now. We're going to be talking with the both of you a little bit more throughout the show. In the meantime,